All right, what up, traders? Jeremy here, coming at you for our Sunday market bias update report for Sunday, March 24th. On new tradition, I am starting off sharing my trading journal here to show the summary of profit and losses from week to week. So this week, I actually took about a $3,500 loss on the week overall. It was the second week total for the year so far that I've actually taken a loss on. And the two big losses that I took, you can see here, one was just over 5,000, which is quite a bit more than my typical loss. And then the second one was 4,000 and basically ended the week down 3,500, made back a few trades, trading some stocks and options here. You can see had one for about 1,000 and then another about 600 somewhere in there. So anyways, total loss for the week about 3,500. After gaining over 30 in the last couple of weeks here, 36,000 to start the month. It's no surprise that maybe you give a little bit back as the market ebbs and flows. And specifically for this week, I wanted to talk about these two losses in particular because it's a really good learning opportunity for people that don't know what counter trend trading is. Counter trend trading is basically when you take a trade that is opposite to the current trend and you're looking for a significant bounce in the other direction. And so these two trades basically happened on Bitcoin's chart right here in these 3 days. I was basically trying to play the bounce off the 20 period moving average, expecting us to have a pop back up to retest the 9. And just didn't time it quite right. And even if I had timed it quite right, the volatility that has picked up here over the last about week and a half was just so chaotic, and the futures are so leveraged that you have to be really, really careful when you try to counter trend trade. And I ended up actually, even in my notes here for the positions, had noted when I got into the trade, there's a higher than normal chance this position might roll over on me, but I'm interested enough in the oversized profit potential to justify the extra risk. And so I went into the trade, at least this first one, eyes wide open, knowing that it was a higher risk trade than I normally take. But because of the profit potential on it, I felt comfortable with that. And also just because of the buffer I've built in the account so far this year and the really, really solid start to the month. I was kind of looking for a home run trade, and I don't do that as a general rule very often because if you swing for home runs all the time, it's a really good way to go broke. But every once in a while, when I see something specific, I'll jump in and take that extra risk. And this one didn't end up working out in my favor, although it very easily could have. You can see I got in at 68,730, ended up getting out about 1,000 points lower. And with the futures, because each future contract takes 5 Bitcoin, you multiply that $1,000 loss by 5, and that is the $5,000 loss that I took. But if you look at my exit price here on the 17th, and then I took another trade again, trying to do the same thing, and actually entered way higher at 69,350. So I had potential actually to make about $5,000 or $6,000 easily on that trade, and I was actually looking for quite a bit more than that, which is why I took that trade in the first place, for that extra profit potential with the higher risk. But just didn't time it quite right. Got booted out of the trade for max loss, and then ended up having it rebound. Took it again, and then had timing just wasn't working out. Basically noted here, trying to counter trend trade again, looking for a short-term bounce on intraday charts amidst a larger downside volatility. And afterwards, basically just said, I didn't trust the price stability there after such drastic price action moving around so incredibly much. So I ended up deciding to get back out again and just take the loss and sit sideline for a while. So now looking at Bitcoin, if we dive right into our charts, we've reclaimed our moving averages, at least on the short term here on the daily chart. But the next trigger to get in isn't until we clear the highs from these 3 candles. And that will put us right around 68,400. So if we can clear the top of these three, and have a close above that, the bullish trend will then be off to the races again, and this will be in context just a large bearish retracement. So anyways, that's kind of the summary of last week. Loss of 35,000, and kind of describing a little bit about why I decided to take those trades and how those turned out. And then just to show here for the year, so I actually meant to do a social media post when I broke 100,000 in gains for the year, but failed to do that. So this is my official announcement, I guess, on social media here. As of the 14th of this month, so 10 days ago, I actually crossed the $100,000 in gain mark for the year since January 1st. So it's just been an outstanding year. That is not typical performance in 2.5 months to make that kind of money. But the stars have been aligning, and I've just been smashing my system left and right on it. So you can see the profit and loss year to date risk graph here, showing my gains broken down into 2-week periods, and it's just been this exponential tear. Am showing that loss right now, but we have 1 week left in this period, so I'm hoping that in the next 7 days I can turn this around and add a nice green candle there as well. And then just going out to show a little bit more of the trading journal here. This is kind of analysis tab that gives you a chance to write notes at the end of each quarter and kind of at the end of each year, etc., looking at your gains and losses. And you can see my actual trading goal for this year was just over 100,000. And after breaking that in the first few weeks of the trading year, I just could not be happier. So anyways, for new traders, a learning lesson here on top of the counter trend trading that I already talked about. One other thing is that it's very common, and I still personally struggle with this sometimes in my own trading. And this past week was an example of this. When you go on large winning streaks, sometimes it becomes easier to subconsciously not hold yourself as strictly to your trading rules. You start almost feeling invincible in the market and feeling like nothing can go wrong. And it becomes a little bit easier to give back some of those gains. I don't normally counter trend trade, but because I had a buffer in the account, I decided I was going to try to take a stab at it, even though I knew there was a larger chance of it potentially rolling on me. And I ended up giving back a little bit of money this past week because of that. So anyways, little learning lesson there. A lot of traders, professional traders, will actually give themselves a mandatory hiatus from trading if they go on a really long winning streak, because they want to give themselves a chance to cool off, reset, and make sure that they aren't breaking their trading rules on that. So anyways, just figured I'd throw that out there for anyone that is interested in hearing that kind of analysis on it and little tips associated with that. So with that said, let's dive into the week ahead and talk about the trading opportunities coming our way. So we already talked about Bitcoin. We need to break over these 3 candles there. On the daily chart, we are seeing slowing momentum on the MACD, and it is still above the 0 line, which is bullish. If we drop this into a 4-hour chart, we are still seeing a downward slope for the highs of our MACD there. So we have not broken that trend and back above that. I'm hoping that this is a new pivot, higher pivot low on the MACD, which correlates with a higher pivot low potentially forming here and confirming on the price chart. So if we get back above that 68,400, that will actually clear the 50-period moving average on the 4-hour chart as well. And that has potential to be a really good break to the upside, looking to come back up to all-time highs and then potentially above. So that is the next trade that personally I am tracking. And now that we have a higher pivot low starting to form here, we have this kind of little wedge pattern, and we are just starting to break out from that. So I'm starting to get interested in taking another bullish position here. Needs a little bit more development, but keep that on your radar. If we go out to crude light, toss this out to the daily chart, got a nice little pullback into the rising 9. And right now we need a green candle. So if I zoom in here, we had our signal candle, which was the doji, sitting right on the 9 EMA. And if this candle today breaks back above the high of that signal candle there, which is currently at 81.45, that will be the trigger in. Easy target one would be back up to previous resistance at the previous pivot high. And then honestly, I'm thinking somewhere probably up to around 86. There's a potentially really good trade brewing on crude light. If we go out to the S&P, honestly, the market absolutely loved Jay Powell's press conference last week. Rate hikes are still paused at the highs that we've reached so far in this rate hike cycle. Looks like we will most likely end up getting a 25-point cut sometime probably around June. I doubt we're going to get it before June, but June would probably be the earliest in my mind that we start seeing rate cuts. And honestly, more likely in my mind would be like July, August, and we probably will have maybe two back-to-back cuts of 25-point basis. And then probably pause for the rest of the year. That's kind of what I'm anticipating. But anyways, you can see on Wednesday, nice big bullish move. Market obviously really loved everything that he was saying, and the development in the economy is still strong given the backdrop that we've been working with despite inflation. So market liked it, nothing to see, continued uptrend, and dip is continuing to be bought each time. Again, said this for multiple weeks now. I like playing charts like this that are kind of on the lower spectrum and maybe have a slightly lower risk profile to them. I personally, just my style of trading, don't like chasing once trends get going like this. I like to try to find the trends before they get going and get in at the start of them. But that's a personal preference. There are tons of traders that are just absolutely killing it working this trading system right here and just playing a bounce every time the price comes down to that 20-period moving average and buying that. So it's kind of up to you what your trading style and personality is. But for me, I still don't like chasing this. That does not mean that I'm not playing stocks in the S&P. Obviously, if I see a stock that I like, I'm still going to trade it. But in terms of trading the actual index itself, I'm not super interested in that. Going out to the NASDAQ, rinse and repeat exactly what I just said. We are getting a breakout potentially confirming on the MACD here of a longer term duration resistance line there. So actually it's signaling that it might have some gas in the tank here still. Again, not interested in trading the actual index itself, but there are plenty of big tech names that I am eyeing and looking at and will potentially be trying to dive into here at some point soon. Going out to the Russell. Russell attempted to break out on last week's news with the Federal Reserve announcement and everything, ended up having some profit taking on Friday that drove it back down before the weekend. That's fairly common when you have a big bullish price action on a news announcement midweek or early week for the week itself to ramp up and have that bullish momentum. And then people to say, hey, you know what, before the weekend, I want to reduce risk. We've gotten a good run out of it. I'm just going to go ahead and cut the trade and lock that profit in before the weekend. So that's kind of what happened on Friday. I am anticipating some stabilization here on the Russell 2000 and potentially coming back up to try to break that ultimate resistance at 2137. Probably this week is my guess, unless we get some kind of weird news cycle that hits. But I'm anticipating that we are going to clear that. And after that, it's really kind of pushing up to the 2200 area, and then 2300 area would be kind of my secondary target. Going out to gold. Gold tried to pop hard again last week on Thursday. Couldn't hold its head above there, needs more time to consolidate. Honestly, I am kind of waiting for this 20-period moving average to continue to creep its way up. And if we get a few more days of this 20 moving average kind of creeping its way up to act as support along with that flatlining 9 and then see a move higher, I will be interested in that. But until that occurs, I think we need to chill out on gold. This was just a massive run on gold. And after that big of a movement in that short amount of time, it needs some time to chill out. So nothing to see here really on that for the time being. Going out to, let's do silver real quick. Silver actually losing some steam. It is now signaling bearish and probably coming back down to the rising 20-period moving average. I will not be surprised at all to see this find support on the 20-period moving average, and hopefully will give us a signal candle and a confirmation candle here to potentially play back up into this resistance again. So I'm keeping an eye on the depth of this retracement and waiting to see where the bottom on that retracement forms. Finally, let's just go out to UUP really quick. So this is an area that is going to put some pressure on both gold and silver and also the equities market in general. We have officially cleared this resistance line that we were kind of hoping was going to hold, but didn't. We do have the 20-period moving average up at 2860 that should give some resistance to it. And if we drop this out on the weekly chart, you can see the 2851 is the 50-period moving average on the weekly chart. So we do have some overhead resistance it's going to have to contend with. Then we have a couple of wick highs here and here. So there is some resistance that could slow this down and cause it to roll back over again. So we're not super worried at it at this point, but if it does get back above that like 2860 and closes above that, that would not be particularly great for equities. Finally, going out and looking at the week ahead for our economic calendar, consumer confidence on Tuesday. FOMC member Waller speaks on Wednesday. Not expecting him to say anything of importance that's going to move the market, honestly, just kind of reiterating exactly what Jay Powell said last week. So I'm kind of anticipating that's going to be a nothing burger. GDP quarter over quarter is coming out on Thursday, along with unemployment claims, pending home sales, and consumer sentiment revision. So Thursday is going to be probably the most important day coming up this week. And then Friday, just kind of following that up with PCE price index and Jay Powell talking again. Again, I think we heard everything we need to hear from him for this month last week. So I'm not really anticipating this moving the marker at all. Finally, if we go out to the heat map, tech is ramping up once again. Got some really, really nice moves coming off of some retracements in the tech sector. And the only one that didn't participate was Apple. And there was actually some news on Apple that all of their M1 chip computers might have a flaw in it that is unpatchable. Security flaw that is unpatchable. So there was a little bit of news around that is continuing to hold Apple down. We'll have to see how that resolves. It will resolve at some point. Apple is a great company. Obviously, it's not going bankrupt anytime soon. So just continuing to wait for a little bit more development on Apple, but it should eventually start to play some catch up with these other big tech names. So anyways, guys, I hope that helps. As always, I would really, really appreciate a like, a share, a subscription. If you haven't already, click the bell to subscribe to the channel if this is helpful for you for prepping for the market ahead. And as always, again, if you have any questions, leave them in the comments and I will get back to you shortly. Have a great trading week, guys. Trade safe.